को बना दे स्पेशल और फैशनेबल. Fox Scent, new fashion wear for men.
Good afternoon, you're watching Bloomberg Quint Live and these are the headlines at 12. The markets continue to gain momentum on the first day of the March series. The Nifty trades above the 10,450 mark. All sectoral indices gain with volatility cooling off for the third day. IT stocks see volatile moves after the Trump administration issues fresh visa norms which make it tougher for those seeking H-1B visas. That is according to a PTI report. Federal Bank gains the most since October last year after it gets a board approval to buy a 26% stake in Equities Capital. And Jubilant Life Sciences is the top loser on the BSE 500 index after 51.2 lakh shares change hands in a block deal. And with that, it's over to Darshan Mehta for Hot Money. Darshan?
Thank you, Alex. Hello and welcome to Hot Money on Bloomberg Quint Live, India's first digital live streaming business news service. This is a show which gets you a complete wrap of all the stocks that are buzzing in trade. I am Darshan Mehta. Let's welcome our experts then. Vinit Bolinjkar of Ventura Securities, Kalra of Target Investing, and Senthil Manikandan. I think he's running a little late, but he's the analyst at Newberry Capital. He'll join us on the show in a while. Today on Hot Money, we'll discuss stocks like PC Jewellers, Indiabulls Real Estate, Britannia and UPL. So these are the counters that we want to speak about. Let's start with the first stock, and that is PC Jewellers. The big question that we are asking is the fact that the counter has corrected almost 50% from its peak. The question that we want to ask is that is external news affecting the stock price more than the core performance of the company? So we'll ask a guest. Samir, I'll start with you. You have a minute for your opening statement. What do you have to say?
So we're bearish PC Jewellers. It's not only about the noise. If you see the books as well, they have around 600 crores kind of debt sitting on them, which is a short term, and around 300 crores is with their one subsidiary. It's called PC Universal. So over there, and secondly, if you see the books, there's a domestic business and export business. The domestic business gives a good margin of 12 to 13%, and the export business gives a margin of 8 to 7%. So taking into focus, the export has now been around 30%, which has been growing. So I don't understand why a company is growing the lower margin business rather than focusing on the domestic business. Secondly, if you see their working capital, the terms, the trade payables has a 120 days kind of system, and trade receivables which is around 50 days. So that is a big proportion change. And
okay, I'll have to get back to you. Your time is done. Vinit, your opening statement on PC Jewellers.
So with jewellery stocks, the truth will never be known until you are exposed. And my advice to all the jewellery firms would be to come clean if they would like to have their market cap being re-rated. So given that kind of scenario, I think Titan becomes a much better play. And not only from the market point of view, but even from the consumer point of view, you cannot trust the kind of damage that Gitanjali has done to consumer sentiment. Nobody is going to trust their gold bars or their precious metal or hard-earned money with these. And as a result, Titan will make strides, gain market share, and keep doing well. Okay,
so that's the opening statement. Senthil, hi, welcome to the show. Your opening statement on PC Jewellers. The question that we're asking is external news overshadowing the core performance.
Yes, clearly the last few weeks with the jewellery stock taking a beat because of the external fatalities, but we are quite bullish on the entire jewellery sector, and with Titan, it's a market leader. It's trading at around 60 times price to earnings. We are neutral on the stock as per Titan, but PC Jewellers, which is the second largest player in the market, and if you look at the performance in the last 10 years, they started a single store in 2006 and now they operate 80 plus stores, and now they are going via franchisee route. So this is the asset light model, and this franchisee route along with their focus on the domestic operations, I think we are quite bullish on the PC Jewellers stock. And with respect to the debt of around 650 crores, and they have a cash of around 1000 crores. So net debt is they are net debt free company, and with promoters owning 60% stake, and pledge is nil. So whenever the promoter's holding is high and pledge is nil, it shows the management confidence in the business. So we are quite bullish on the entire jewelry sector and also the PC jewelers.
Okay, so you had the opening statements from all our three of our guests. Now we'll open it up for questioning or a debate if one of our guests wants to ask the other guest. So Vinit, I'll start with you. You have concerns over the entire jewelry sector. You like Titan, but Titan is more of a diversified player. The valuations are much expensive than a PC jewelers. I think the only concern for PC jewelers was with Vakrangi buying in. I think that was it. But on the core business, are you still having doubts on PC jewelers?
So the very ethos of their financials is in question.
Okay.
Okay. So until the management does not come out, does a forensic audit of what is their exposure to the banking segment, because a can of worms can crash your price to zero, right? We've seen in Gitanjali. So keeping all these things, my concern is more with the jewelry sector and sanctity of the owners.
Okay.
Okay. So when you consider these, the investor sentiment is actually completely dampened. As I said, not only from the investor point of view, the consumer also.
Okay.
For example, Gitanjali, a franchisee placed 106 gold bars with him, and till date he's got no resolution, right? So who's going to go and do business with them, right? So what are you left with as a consumer? You know, you're going to go to a Tanishq. You'll go more to a Tanishq, you'll go more to a Titan, or you'll go to your old Pediwala with whom you have family relations.
Okay.
So given that kind of scenario, until they cannot build trust, okay, I don't see these stocks recover. There can be a dead cat bounce, but I don't see recovery coming in.
Okay, Samit, you were saying that they're growing more the export business, which is a low margin business. But if you compare it to the others, like even a Thangamale or a TBZ, the margins that they do even on the export is much higher than the overall EBITDA margins that they do.
See,
it's one of the highest margins in the jewelry.
So
segment.
my stand is same as Vinit has on the sector as a whole. See, the only problem first of all, you have to see the company on standalone basis. Let's talk about that. So they have 600 crore debt, right? As he said, there's 1,000 crore cash. So why are you raising that short-term debt? Because your trade payables are 120 days and your receivables are 50 days to the max, which any export company, if you pick, will not show, because exporters always have a higher receivable days than a higher payable days. If they are able to manage it, really good enough. Second, the whole point is last year, if you see the financial report, annual report of them, there were two triggers which I see are negative. One is they gave a loan of 300 crores to a subsidiary, right? And then another, they did 180 crores of investment in a subsidiary in Dubai. So when you're already working as exports, what was the need to put that kind of money? Because it's a total of 300 crores what they have done. As an investor, I'm concerned.
Okay. So that's so I think two of our guests have a little bit of concern. Finally, you are extremely bullish. You don't agree with them, but you are more focused on the core fundamentals. Do you have a target, or what kind of growth do you see for PC jewelers?
So basically, with GST coming in, actually the unorganized segment will naturally transfer to the organized players. So currently 70% is with the unorganized. So Titan, PC jewelers are going to gain market share. In morning also, I saw the Titan management speaking like this news. These events which have taken in the last 2 weeks will automatically shift towards the organized players. So we are seeing 20-25% growth for the entire industry, and with the PC jewelers and Titan posting 30% kind of growth in the next 2 to 3 years.
Okay. Okay, so that's the view that we're getting on PC jewelers. Two of our guests don't have a positive view, while third guest Senthil has a positive view. So the view as a viewers have a 360-degree view on PC jewelers. The next stock that we want to talk about is Indiabulls Real Estate, extremely volatile. But the big question that we are asking on Indiabulls Real Estate is that they have announced that they want to demerge their business, their residential business and the commercial business. The counter has already rallied significantly post this announcement. Will this create value for shareholders? We are asking our guest, Senthil, you think your opening statement, 1 minute?
Definitely, in the last board meeting, they announced demerger of their commercial business, and they mentioned like the new third-party shareholder will be coming in and infusing of funds. I think they are in talks with the private equity player for that. So currently, if you look at their segments, they are in commercial plus residential. Well, commercial segment, their rental income is around 750 crores.
Okay.
And management is saying in the next 6 upcoming development projects, next 3 years, their rental income will double. So if you do a rough valuation of the, if the rental yields in the commercial segment is 6 to 7%, so the enterprise value in the commercial segment will be around 10,000 crores. And then they have a residential segment also, that is around 30 million square feet of projects they are doing it. And they have a land bank as such. So next, with this infusion of funds coming in, definitely their leverage will be going down. So currently their leverage is a bit high. So it is around 2.2 times. So I'm seeing the infusion of funds will be the trigger for the business as well.
Okay, so your minute is up. Samir, your 1 minute, do you think that this will create value for shareholders if they do this demerger?
As of the state of current company, no, because the residential is a drag on commercial.
Okay.
So post the demerger, how the debt splits, that will be more important for this whole, as a whole company to see. Because as he's saying that next 3 years there will be a 1500 crores kind of annuity coming in for them. So that's a positive for the commercial side. But if you see the residential market, that has almost a very high inventory level of past 5 to 6 years. So that will be very difficult to churn out and create that amount of cash flows for the new projects to take in. So I think right now as a whole, it won't create that much of value. But yeah, after the demerger, I think commercial side will give you a better value than the residential.
Okay, so we've heard Vinit does not track Indiabulls real estate, so we'll come straight to the discussion with our guest. He's saying that there could be a drag as far as residential is concerned on the commercial. No doubt he shares your optimism on the commercial side. You want to respond in terms of what could happen with the residential side? Is that a concern?
Yes, definitely, because compared to the residential market, if you see overall India, commercial segment has been doing well last 2 to 3 years. But one is this demerger and fund infusion coming in commercial segment, like Samir pointed out. I definitely more bullish on the commercial compared to the residential. And there is one another management item also, like they are coming out of the Chennai market. So they said like Chennai being a non-core market, they are planning to exit the Chennai market. So this could also result in higher cash flows to fund the residential segment also. So definitely I agree with Samir, there is a drag on the residential segment and it is an industry-wide phenomenon.
Okay, Samir, there was this news article that came in the ET indicating that Blackstone is looking to invest in the commercial. Will that be a big re-rating trigger if that indeed does happen?
See, I don't give it as a re-rating. I'll give it as people who couldn't value, the commercial asset now have a valuation to work with. Like same thing happened with DLF, right? When GSE gave them a valuation, it was a valuation for the commercial assets of real DLF. So real estate, what the problem is, a part is of what is completed, you have to give a valuation to that. And the second part of the valuation comes from the land bank they have. Right. What happens in these kind of markets, especially in the residential part, when they are not able to generate enough cash flow, working capital, or for new projects, they start giving out their land banks, whether it's in non-core Chennai or wherever you see that land bank. That land bank sale also hurts your valuation on the land bank valuation which you're getting. So I think residential, everyone who's heavy on residential will face this issue for next 2-3 years, because it might be easier for saying that RERA has come in, because see, a lot of projects were doing a pre-sales. So there was a lot of money being raised for pre-sales, and that money could have been used for other projects. So RERA has given a lot of restriction to these guys. So I think residential will face a bigger risk out here. So whatever upside commercial will give you, residential will pull.
Okay, so that's the view that's coming in on Indiabulls real estate. Senthil is extremely bullish, but I think the consensus view that we are getting is that the commercial assets could probably be the trigger point for Indiabulls real estate going ahead. The next stock that we want to talk about is Britannia. The counter has been doing well for the past few days, but if you're looking at the valuations on an FY19 basis, it's trading much higher than HUL, Nestle, or the other domestic companies in the space. So for Britannia, the question we're asking is, will you choose growth over valuation for Britannia? Vinit, you start your opening statement on Britannia, growth or valuation.
So my thing is valuation over growth, because I think the valuations are rich. Number one, growth is around 9 to 10% top line, 13% CAGR on EPS. So considering that, I think the valuations are rich. Company's operating performance has been excellent. They have raised margins. They are doing capex to backward integrate into dairy, but they're going to face a lot of competition coming in from Parle. So Parle is looking to up the ante on doubling their business. They're also trying to premiumize. So the heat of competition when it picks up is, we would like to see this stock play out. There are far better stories available in the consumer staples stroke foods business, which offer better value, are much cheaper. So there is a risk to the business from the fact that earnings growth could slow down.
Okay, Samir, your opening statement on Britannia, growth or valuation?
So we pick growth because valuation is derivative of pricing, right? What market gives. So growth is in the company's control. The price of the share price is not in their control. So we can't discount that much. The growth, if you see last 3 years, have gone up drastically because of the new management coming in. Their focus is value add on the biscuit sides, right? And on the dairy, which is a higher margin for these guys. Now why growth? Because if you see valuation wise, past 5 years or 7 years valuation, they've always traded on a 36 kind of forward PE. Now, right now, even if they're trading at 45 or 46, there's a 20 to 30% downside, right? That can be more of accumulation which you can create.
Okay.
Because whatever we initiate, we believe that even if it's a 40% downside, we will still be buyers.
Okay.
So it's not something you buy today and just don't add up further or just.
Okay, Senthil, your statement on Britannia, growth or valuation?
So it's a valuation.
Okay.
So Britannia is a great company, but at this point of time, it's not a great investment. Basically, because if you look at last 5 years, the new management has come in. They have substantially improved the margins because they have overall their like the facilities and the ovens. They have they have plucked out of the low-hanging fruits. So currently, the margin expansion from here has to be come from the raw material side, which what are the majority of the market is believing because of the fall in price of wheat, sugar, or milk. But on the operational side, I think majority of the whatever the efficiencies has to come in has already come in, and as two other drawbacks or concerns could be the competition pressure from ITC and Parle, and the second concern would be their what is their future growth plans. So if it is dairy is already a heavily competitive space, and the margins in dairy are like 1 to 2%. But now currently Britannia is making a margin of 7 to 8% net profit. So will future foray into dairy will bring down the margins is a concern.
Okay, so that's the consensus that we are getting at this point of time. Valuation seems to be the consensus here as our guests are concerned. So Vinit, you spoke about valuation. Growth is actually slow, hasn't been as much as it was earlier. What else would you pick? So if not Britannia in the FMCG space, are there? When you said there are better options, can you name which are the better options?
We like LT Foods.
Okay.
Okay. It is at a far steep discount to the similar players in the rice business. Okay, they've got their act together. They're doubling their domestic business. Last 10 years, they've grown at 17% CAGR. EPS has grown at 35%. Okay, they put up a manufacturing facility in the US. They've gone into Europe. There's an export duty of 170 euro per ton, import duty. So they're backward integrating, shipping brown rice and milling the rice to get white rice. So I think Europe will play out, US will play out. In India, they're doubling their distribution reach. Modern trade, if you go and see, you'll find Dawat and India Gate featuring prominently. So also their capex plans are over. And last thing is that EPS will grow substantially higher. They'll continue to do 13% growth. EPS will grow at about 30%.
Okay, so LT Foods is something that Vinit says that it's a better choice than if you're buying Britannia. Samir, my only question is that competition is big, and he also spoke about it. How big of it? Do you think there is substantial upside in Britannia left, considering at this point of time?
See, upside, like we started buying Britannia when it was 2,000 rupees, right? So right now also, see, when we pick a stock, we see next 5 to 10 years of the firm. We really don't see the shorter term, because shorter term will always have volatility due to other reasons and quarterly results and everything. So that being said, if you see the history, Britannia has always underperformed the FMCG sector due to the lower margins of the system. Now, since new management came in, the margins shot up drastically. It almost doubled from a 6 to 8% to 11 to 14%. Now, where I see the focus, even in the dairy, what he's talked about, they are not focusing on selling out milk as a product. They are focusing on creating value-added dairy products, which are at least a margin of 8 to 10%. So if you sell more, you are able to create. So I think there's a substantial upside to it.
Okay, so that's the view that we're getting on Britannia at this point of time. And the last stock that we want to talk about is UPL. Ever since the numbers came out, the counter has been on a downward trajectory. The stock is trading at a 52-week low. Is it the right time to start accumulating UPL? Senthil, you go first. Is it a good time? Your opening statement.
I think yes, because stock is trading in 52-week close, and if you look at the UPL as per se, they have a diversified business. So they have presence in India and Latin America, US and Europe. So being a company in a cyclical business, having a diversified geographical diversification is like an edge. And if you look at the past 2 years, there has been a considerable inventory build-up in their key markets like Brazil and even in India. But subsequently, in the last 2 quarters, what the management has been saying, like the inventory has been reducing. So going forward with inventory at low levels, substantial growth in the volume terms we can see. Even if you look at the last 2 years, the entire agrochemical industry was degrowing, but the company was posting positive volume growth. And the company has a strong financials. They have a ROE and ROC of upwards of 20%. So stock trading at 15 times, I think it's a good value buy at these levels.
Okay, Vinit, your opening statement on UPL. Good time to buy?
Yeah, good time to buy. I think the LATAM market, which didn't perform, is a one-time thing. Volumes will come back as inventories recede. India is growing well. We had a good monsoon. Europe has seen good buy on sugar beet doing well. US will continues to do well. So given all that, I think the stock is very undervalued and we can look to buy into it.
Okay, and your opening statement, Samir, on
I
UPL?
don't think so. It's a buy for me.
Okay.
Given that it has a huge debt sitting on the books, it has around 92 subsidiaries, which is very hard to track on. Then the other income has increased from 131 to 450. The major chunk has come from an item called unwinding interest on trading receivables. So it's not a cash income. So it's something which I have a trading receivable with, and I'm receiving an interest on that. So that is a big chunk of other income now, which is supporting the PAT or PBT itself, because same amount has increased in the interest. So I think there are a lot of red flags for me for not to invest in this. I rather pick up PI Industries as compared to UPL.
Okay, so that's the opening statement. I just want to address the flags that are coming out. It's a Bloomberg exclusive. Going likely to ask a PNB to pay for its debt. If we can have the stock price of PNB, we can come to know. And they're asking review their foreign accounts. So I think it's a cut of almost 2% posted. Asking PNP to pay for the fraud liability. So the 11,000 crores probably will come out of PNB. That's a Bloomberg exclusive, and we'll try to get more details on this. But coming back to UPL, I'll start with you. The concern that he spoke about, debt, how big of a concern is debt on UPL?
I don't think it's such a concern. I think it's quite manageable, and they will definitely pull out of it.
Okay.
So that's not too much of an issue.
Okay, and the subsidiary concern, would you have that concern?
So, if you see Motherson Sumi has got subsidiaries all over the world. Mahindra's has innumerable subsidiaries. So having subsidiaries, I think integrity of the management plays over about subsidiaries. So the more number of geographies you operate in, it's a compulsion of the geographies to have subsidiaries.
Okay.
So subsidiaries, to my mind, is not a area of concern.
Okay, and Senthil, finally, is this the best play in this thing, or would you pick someone else? You're bullish on UPL. Is there something else that you would like in this space?
So being UPL a diversified player and the current valuation is also attractive, so we are bullish on that. But apart from that, domestic focused players in the agrochemical space like Big Money or like Samir pointed out, Pi Industries, or all of them are looking good, but the business say, but valuation per se, I think UPL gets better play.
Okay, so that's the view that's coming in on UPL. Samir is not at all bullish on UPL. He would prefer PI Industries, but other two guests do believe that there is enough traction for UPL. With that, it's a wrap on today's Hot Money. Senthil, Samir and Vinit, thank you so much for joining me on the show. Ask BQ comes up next. Stay tuned to Bloomberg Quint.